Assalamu alaikum. Bismillahirrahmanirrahim. Continuing with the previous lecture in which we have learned accelerated depreciation method, particularly 150% declining balance method. There were three accountable events we talked about. One was acquisition. We learned about acquisition. Then second was recording of depreciation. We did learn about recording of depreciation in the last two lectures. And the third one is going to be disposal. So this lecture will be focusing on disposal and disposal of plant and equipment once they are of no more use. So here, as the plant asset wears out, okay, or become obsolete, they must be either scrapped. By scrap, book means that they are given to the scrap dealer at no charge. You get no price for giving away your own plant asset. This is in the case of America, but in case of Pakistan, we do get some price even if we give it to scrap dealer. Then we are selling it, the used plant asset. We get some price. And the third one is trading on a new equipment, that is, we are exchanging old one with a new one and paying price differences between the two equipments. I hope my voice is audible. I hope my voice is audible. Upon disposal of depreciable asset, the cost should be removed from the asset account and accumulated depreciation should be removed from the related asset account. Now, for example, of the equipment which was purchased 10 years ago at a cost of 20,000 has been fully depreciated, meaning that its accumulated depreciation is now 20,000 and the book value is zero. And this asset is of no more use. So in that case, we are going to debit accumulated depreciation of this equipment by 20,000 and office equipment will be credited by 20,000. So this is how we are going to record disposal of fully depreciated plant assets. So whenever we are disposing of a plant asset, we will either have a gain or a loss, okay, depending on the price we are getting for the disposed asset. If the price is more than the book value, then we are going to get a gain. Why? Because the reason for this gain is because the selling price will be higher than the book value. Since the selling price is going to be more than the book value. So we'll have a gain. Why? Because the selling price, which is the disposal price, is going to be more than the book value. In this case, we are going to have a gain. Whereas if the selling price is lesser than the book value, is below the book value, in this case, we are going to have a loss. Okay? Why? Because the disposal price is less than the book value. So scrapping an equipment which is of no more use and getting a price zero for it. So this is the same entry which we have recorded previously. In the second example, here the cost of the equipment which is being scrapped, because that means we are getting no charge. has a cost of 25,000, whereas the accumulated depreciation is 24,800. So 25,000 minus 24,800 gives us a book value of 200. So in this case, we will have a loss. Why? Because the selling price we're getting is zero and the book value is 200. So we have a loss of 200. So in this case, the entry would be accumulated depreciation of the equipment debit by 24,800, loss on disposal debit by 200, and office equipment credit by 25,000. I hope that's clear with all of you. Okay, now we have the same cost and the same accumulated depreciation, but this time the asset is being sold at a cash price of 400. So in this case, we'll have a gain, okay, and it's going to be 400 minus 200, which is the book value, and we will get a gain of 200. So in this case, the entry would be cash debit 400, accumulated depreciation of this equipment debit 24,800. We'll have gain credit 200 and office equipment credit 25,000. So the total debits and the total credits are equal, that is 25,200. So in the next example, the cost and the accumulated depreciation are the same, but the selling price is now 100. So in this case, we are going to have a loss. Why? Because we are selling the asset for 100 and the book value is 200, so we have a loss of 100. So in this case, we'll have cash debit by 100, accumulated depreciation debit by 24,800, and loss on disposal debit by 100, and office equipment credit by 25,000. So the total of debits, which is going to be 25,000, is equal to total of credit, that is 25,000. I hope the disposal and which relate to scrap and selling are clear to all of you. Now we are moving towards the example of exchange, that is trading. In trading, we are going to give the old asset and get a new one. So we will see a term used in the question, that is trade-in allowance. This trade-in allowance actually means the price of the whole asset which is being exchanged, the price we receive for the whole asset. So we will find out gain and loss by comparing the trade-in allowance with the book value. And at the same time, we need to find out how much price difference we have to pay. In that case, we have to have the difference of the price of the new equipment and the trade-in allowance we're getting for the old equipment. Now let's see. If you are buying an asset, new asset, which costs around 15,000, and we're buying for cash, simple purchase. In that case, truck will be debited by 15,000 and cash will be credited by 15,000. Now, making it an example of an exchange. Now, let's just suppose that you have an old truck and you want the dealer of the truck to buy it from you while you are purchasing a new truck from him. The cost of the old truck was 10,000 to you, and the accumulated depreciation recorded by you is 8,000. So the book value of the asset, old truck, is 2,000. The trade-in allowance for this old truck granted by the dealer is 3,500. So 3,500 minus the book value will give us a gain of 1,500. Why we have gain is because book value is 2,000 and we are selling or we are getting a price of 3,500 by the dealer for the whole equipment. Secondly, we need to find out how much cash need to be paid since the purchase price of new truck is 15,000 and trade-in allowance that is the disposal price of the whole equipment is 3,500. So in this case, the price needs to be paid with 11,500. So the entry for recording of exchange would be new truck debit by 15,000, cumulative depreciation from old debit by 8,000, old truck credit by 10,000, gain on trading 15,000 credit, and finally cash credit by 11,500. I hope these examples are clear to all of you. Now we will solve this question from the book. It says that during the current year, this developer disposed of large assets in the following transaction. So we are going to focus on just two transactions, that is February 10 and August 15. Instruction, it says prepare journal entries to record each of the disposal. Assume that the depreciation on each asset has been recorded up to the date of disposal. Thus, you need not update accumulated depreciation figures stated in the problem. So here we need to record. Okay, this asset has been disposed of. It cost 26,000. It was scrap dealer at no charge. So at the date of disposal, accumulated depreciation amounted to 25,800. So in this case, it's 26,000 minus 25,800 will give us 2,100 book value. Since we are getting zero at the selling price here, and the book value is 200, so we have a loss of 200. So in this case, February 10 entry would be loss debit 200, accumulated depreciation debit by 25,800, and we have office equipment credit by 26,000. I hope this entry is clear to all of you. Okay, August 15 is an example of a trade-in, an old truck or a new one. The old truck costs 26,000 and it has an accumulated depreciation of 8,000. The list price of the new truck is 39,000 and this company received a trade-in allowance of 10,000 for the truck. So it pays only 29,000 in cash. Okay, so vehicle account is being used. So in this case, we are buying an asset of 39,000 and getting a price of 10,000 for the whole one. That means 29,000 price has to be paid in cash. Secondly, the the cost of this whole truck or vehicle was between 26,000. 18,000 is the accumulated depreciation, which means they have a book value of 8,000. We're getting a price of 10,000 for this whole truck. So there's a payment of 2,000. So in this case, August 15, we'll have truck debit new 9,000. Accumulated depreciation except for the whole truck debit by 18,000. We'll have truck credited by 26,000. We will have gain credited by 2,000 and cash credit by uh, okay, cash credit by 29. So if we add the debits and the total credits, they'll be equal. So I hope this example is clear to all of you. Okay, now continue with the final example. And it says that the essential transaction occurred in 2012. On January 1, 2012, this company retired a piece of machinery which was purchased on January 1, 2002. The cost of machinery was 26,000, 62,000, and the life is 10 years with no residual value. Since the asset was purchased on 2002, okay, what do we have to do? Let's see construction. It says that generalize all transactions required on the above date, include entries for to update depreciation expense, depreciation on asset disposal of where applicable. And the company uses straight line depreciation method. So in this case, the asset was purchased on January 1, 2002, and this is disposed on January 1, 2012. So if we see 2004 would be the first year, 2003 would be second year, 4 would be third year, 5 would be fourth year, 6 would be fifth year, 7 would be sixth year, 8 would be seventh year, 9 would be eighth year, 10 would be ninth year, and 2011 would be the 10th year. So on December 31st, 2011, the depreciation would have been recorded. The cost of the equipment is 62,000, the life is 10,000. So each year depreciation recorded would be 6,200. So for 10 years, this would be equal to 62,000. So cumulative depreciation would be equal to the cost and the book value would be zero. Here, we will not be required to record any depreciation expense update the account because it has already been done on December 31st, 2011 for the final year. So here on January 1, 2012, we'll have accumulated depreciation 62,000 debit and machinery credit by 62,000. I hope this is clear. Okay, now here, this asset is disposed on June 30th, 2012. It was purchased on January 1, 2010. The cost was 36,000. The life is 3 years with no salvage value. So in this case, 36,000 divided by 3 will give us 12,000 as our depreciation expense for each year. So the depreciation expense for 2010 would be 12,000. For 2011, it would be 12,000. Whereas in case of 2012, it would be just for 6 months. So that means it's going to be 6,000. We will have 18,000 as the, sorry, 24,000, 30,000 as the total accumulated depreciation. In this case, the asset was purchased for 36,000, accumulated depreciation is 30,000. So the book value here is 6,000. Well, the price you are selling it for is 5,000. So there is a loss of 1,000 in this example. So in this case, we have to first of all record on June 30th, 2012, depreciation expense debit 6,000, accumulated depreciation credit 1,000. Then another entry would be you're going to debit cash by 5,000, debit loss by 1,000, and debit accumulated depreciation by 30,000. And we'll have computer credit by 36,000. I hope this entry is clear to all of you. Okay, here we are selling the asset for 69,000 cash. Cost was 25,000 and it was purchased on 1st of January 2009. The life is 5 years and the salvage value is 4. So in this case, 25,000 minus 4,000 divided by 5 gives us a cost of 4,000 depreciation expense of 4,200 each year. So we'll have depreciation for 2009 as 4,200. We'll have it for 2010, 4,200. 2011, we'll have 4,200. And for 2012, it would be 4,200 again. So that means it's going to be 16,800 as the total accumulated depreciation balance. But here, on 2012, December 31st, we'll have to record depreciation expense for the entire year, which is going to be 4,200, and we'll have an accumulated depreciation of 4,200. Okay, here the book value would be 25,000 minus 16,800. So we have a book value of 200. We are left with 8,200. So since we are selling this asset for 9,000, so we have a gain of 800. Okay. So the next entry would be cash debit 9,000. We have accumulated depreciation debit by 16,800. Okay, I made a mistake here. This is 9,000, not 90,000. Let me correct it. Okay, and then we have gain of 800. Then we have drop credited by 25,000 to 25,800, and that is 25,800 dividend. And I hope this example is clear to all of you. In case you have any questions, you can post it on the group. Thank you very much.